Good afternoon, everybody. This is Trey getting back in touch with you from Japan. We had a chance to take the team up to the mountains, to a lake, to a dam, to go chill out in nature for a few days, which was extremely nice, especially after all the chaos that's been happening in the last few months. Hope you had a great weekend, and I hope you're looking forward to a great week coming up here as well. In today's video, we're going to be looking at the highly requested Square. You know that last week I dove into PayPal, and I've personally been really interested in looking more at Square because there's so much internet memery going on around it. So in today's video, we're going to break it down into a few different sections. First, we're going to start out looking at who Square is, what do they do, what's their kind of vision. Then we're going to look at strengths and weaknesses, as well as some opportunities. We're going to look finally at their financials, how they've actually been doing, and how they plan to be doing in the coming months and years. And then finally, I'm going to share a little bit about my own thoughts. Should you be buying it? Am I going to be buying it? Do I already own thousands of shares, maybe? I guess a really easy way to start out would be to look at Square's mission statement. It says here, we believe everyone should be able to participate and thrive in the economy. We make commerce easy. We believe the economy is better when everyone has access, when everyone has room to grow. No one should be left out because the cost is too great or the technology too complex. So for me, personally, I got into Square years ago when they released the Square Cash app. And I was kind of like, okay, this is a cool app that I can use to send money back and forth to people. But many others have heard about Square in recent years because of their systems that they're setting up for small businesses. You may have also heard a little bit about the CEO named Jack Dorsey, who also is the CEO of Twitter. I'm the CEO of a company, and my wife is the CEO of a company, and it's already mind-numbingly complex and busy. I can't imagine how overwhelming that must be for Jack Dorsey to do that, especially with a company like Square that's like growing into a market that's so complex and has so many rivals already. But simply put, I think Square's goal is to replace banks coming up in the future. We know that typically we put our money in banks and then banks take that money and lend it out to other people. But I think Square's vision is kind of like make it really easy to send money back and forth between friends, first of all, and then start adding on a bunch of different benefits for using those kinds of services. And then on top of that, start connecting with all kinds of merchants who are offering services, give them discounts and benefits and also business tools to be able to make their job easier and grow quicker. And then when you connect those shoppers with those merchants, then there's like multiplied benefits. And it's really interesting. I've done some videos on the past up here looking at Visa and MasterCard, who are payment processors. They generally only control one side of the transaction, whereas new guys like PayPal or Square control both sides of the transaction. So if I'm using Square and I'm paying a merchant who's selling me a shirt on Square, Square gets to not only take a transaction fee from both sides of that, but they also get to learn more about the behavior of the shopper as well as the merchant. Recently, Square's biggest push has been on the commerce side, and they've been targeting mainly micro merchants. They provide a commerce ecosystem that enables its sellers to start, run, and grow their businesses. It combines software with hardware to enable sellers to turn mobile devices and computing devices into payment and POS solutions. They have more than 2 million clients worldwide. And when we're talking about POS solutions, check out these shots they have on their website. You have Square Point of Sale, which is really easy for companies to set up. They have Square for Restaurants, which helps restaurants manage all different kinds of their operations. Square Appointments, which I imagine would be really good for doctor's offices or salons or things like that. And then Square for Retail, point of sale system designed to help retail stores sell in-store and online seamlessly. And all of these things add up to make payment processing and things like that really easy for small retailers. But one of their superpowers is all of the business analytics and all of the sales tools that they include in their entire package. So you're not just buying into like a little iPad kind of thing. You're buying into all of the analytics and then separately all of the other services they're offering, such as loans and things like that. And it's interesting because Square's targeting these micro merchants who typically other companies haven't even really targeted before. So this is kind of an untapped market segment. One of Square's strong points, especially in targeting these smaller merchants, is that they're really good at onboarding people. Basically, if you have an iPhone, you're like ready to go. You know, you can start taking payments in various forms and you can start accessing the analytics and all of the different business tools that they offer in their package. It seems like none of the other acquirers kind of offer these tools for such a cheap price for individual small companies. They're also constantly revamping their tools and upgrading them. I've heard about their instant deposits, where basically, like for me, I've run a bunch of businesses on Shopify or Stripe. Basically, I get paid by the client, and then I have to wait like a day or two or three until that money is in my debit card account. But Square is starting to offer instant deposits, so the customer pays you and then like minutes later it's already in your debit account, which is super great for small businesses managing their cash flow. They've also been branching out into other financial services like Square Capital, offering loans to small businesses, which is really low risk for them compared to other financial institutions like banks, because they get to watch precisely all of the transactions happening, whether it's in the store or whether it's online. They get to know what kind of customers come here, what their average sale price is, all these different factors that normally would take a lot of analysis for a lender to figure out. Square is already analyzing those things anyway. So they can say, hey, you need a loan. We think you probably need a loan of about this much. Here it is. What do you think? And as these services start to grow in the coming years, I think that could end up being a pretty penny for their income. So I've already started to delve a little bit into some of their strengths and weaknesses. We see huge growth. We know that the stock price has been going crazy recently. I guess first of all, I wanted to look at these two different ecosystems that they mention on their investor relations page. I mentioned a bunch of the stuff on the left side for the sellers. They have Square for restaurants, retail, customer engagement, payroll. This is going into a lot of the business tools that I was mentioning. Invoices, appointments, capital, which is like loans, e-commerce, Square Card, virtual terminal, developer platform, and API. APIs are basically like little sets of plugins that you can put into your store to make it more customized and to make it run more easily for your needs. But next, I wanted to look at the Cash App over here on the right side. The Cash App started out basically as an easy way to send money back and forth between you and your friends. It was kind of like, hey dude, thanks for dinner. Here's my $20 for my portion of the bill. But they've also added on a bunch of other services as we see here. They've made buying Bitcoin super duper easy. Bitcoin and other cryptos haven't really been that easy for the average Joe to get their hands on or to hold. Additionally, they've added stocks down there on the bottom, which is really interesting because, you know, like Robinhood, Schwab, TD, all these different brokerages are starting to offer free trading and stuff like that. And Cash has gone ahead and done the same thing. And there's even fractional shares, which is cool for small investors. And then they also mentioned direct deposit on here. I think there will be more cryptocurrencies coming in the future. There probably will be even personal loans coming in the future and things like that. So if you imagine you get direct deposit directly into your cash account, you're like, okay, I'm going to buy some stocks, I'm going to buy some Bitcoin, then I'm going to use this to pay bills and go shopping at maybe even Square merchants. And when you do that, you also get other boosts, what they call there on the chart, boosts or benefits or bonuses or points, whatever you want to call it. So basically, going back to what I was saying earlier, their goal is to kind of replace banks. And that is a really, really, really bold and aggressive undertaking. And I think it's going to take many, many years before they can do this. We're seeing big banks like Schwab see the threat from Robinhood and then just be like, okay, we're going to give up our brokerage fees and we're just going to make it free trading. I use Schwab and I love Schwab, but seeing that flexibility on their behalf was really impressive. We haven't seen that from a lot of the other even bigger banks, you know, like JP Morgan or things like that. And so I see that Square is kind of straddling this point where it's kind of like bringing in a bunch of new direction into the industry and kind of stirring things up, kind of disrupting, while at the same time offering services that everybody already uses, just in a brand new, really simple and really easy to use ecosystem. Here's another little chart they have on their website. It shows strong growth at sale, 40% 5-year compound annual growth rate. And you can see that green on top of those bars is gross profit from the Cash App. And that includes like Bitcoin sales and transaction fees for companies and things like that. So we're seeing that the Cash App is a really big part of their growth. We'll get into some of the more nitty-gritty numbers in a minute. Another interesting point I wanted to mention in the strengths is that typically Square was targeting really, really small micro merchants with annual sales below $125,000. But in recent months, more than half of their merchants have shifted above that $125,000 annual sales point. So that suggests that Square is getting better at attracting not super small companies, and also that the companies that they're helping are growing successfully. I think it's going to be really important for them to transition up into bigger and bigger restaurants and shops and things like that, for them to be able to boost their revenues going into the future. On the flip side, going into a little bit of the weaknesses, one of the problems that's associated with really small retailers is that they're most heavily hit by the pandemic that's going on right now. A lot of these retailers are brick and mortar, and so if you have to shut your shop down for a few months, you're not making money, and then Square isn't making any transaction revenue off of you. Another one of their weaknesses is that they're going to be butting up against really big players soon, including Venmo, Apple Pay, Google Wallet, and things like that. I think they really differentiate themselves by being a brokerage and being a crypto brokerage as well. I haven't seen that yet in any of the other competitors, so that might be a way that they'll be differentiating in the future. It seems like their management team is also aware of that they need to stay kind of one step or two steps ahead of the bigger competition who are slower to shift and transition and get into these new niches. Some call this a weakness. I wouldn't call this a weakness, but it seems like they're much smaller than the competitors that they have in the acquirer field, like WorldPay or First Data or things like that. I personally see that as an advantage. I think the management is prepared for a long fight, but I think they're also offering so many new things that these bigger guys can't transition and shift into easily. Next, let's look at some of the general figures so that you can get an idea of how they're growing, how big they are, and hopefully some of these numbers will help us get an idea of where they are in the industry. Market cap is just below 60 billion. Price right now is almost 135. That's in their 52-week range of $32 to $136. So literally right there at the top. Their PE ratio is 281. Though, that being said, their PEG ratio is about 2, which is suitable for a growth rate of 40 to 50%. This is a similar PEG ratio to PayPal, Visa, MasterCard, these kinds of companies. The PEG ratio is basically the PE ratio divided by the growth rate of its earnings. This gives us a better feel for how well a company is growing as well as its expected earnings growth. The company is not profitable yet. They had a GAAP EPS of negative 24 cents in the last completed quarter. And interestingly, the number of shares held by institutions is 74%. As mentioned earlier, we knew that the stock would be heavily hit by the pandemic going on around the world right now because so many of their vendors are smaller companies. We see that the trailing 12-month revenue is only up 8.9% as of June 2020. That's compared to 30 to 40% in previous years. That being said, their net revenues are up 51% year over year as of May 6th. Gross payment volume is up by 14%, which is lower than previous quarters. But revenue was boosted by 72% year over year in subscription and service revenue. Check out these growth numbers. The Cash App boosted its revenue 197% year over year in the first quarter, including strong growth in April. In the same quarter, Bitcoin revenue was up 367%, which contributed $7 million to gross profits. Management seems to be aiming to get a gross margin of 35 to 40% in the coming years, though they haven't set any dates yet. Here's some other figures for the first 3 months of this year. Revenues increased 44% to 1.38 billion. The net loss also increased from 38 million to 106 million. Transaction-based revenue increased 15% to 758 million. The US segment increased 44% up to 1.31 billion. The international segment also grew nicely, 51% up to 67 million. So that shows you how US-centric the company is right now. Here are some 3-year average numbers for you. The gross margin, 39%. Pretty juicy. Operating margin, 1.64%, helped by improving margins lately. Again, this is over the last 3 years. So a couple of years ago, they were like negative margins, but now they're getting better and better. And then net margins, same thing. Good margins recently, but the 3-year average is only 1.3%. Interestingly, despite the net loss, I wanted to share some numbers. Let's look at the current ratio and the debt to equity ratios. I'm going to add PayPal's figures in here just for reference if you're not familiar with like what a good ratio is. Check out the current ratio first. 2.19 versus PayPal's 1.38. And again, the current ratio is total current assets divided by total current liabilities for the same period. And then interestingly, in the most recent quarter, the long-term debt to equity ratio is 0.97, which unfortunately is about double of PayPal's, but it's still less than 1, which means they are generally not super risky. So I was really interested to see that they have such strong financials in terms of like low debt and actually a good amount of cash on hand as well. Generally, especially in times like this, when you're not really sure, is this company going to be growing? Is this company even going to be able to survive these pandemic times? When a company has a lot of cash and a lot of reserves on hand, you can rest assured in that they'll be able to survive and make it through. Now, Square does have an earnings call coming up in a couple of days here. It'll be really interesting to see. Generally speaking, we're expecting another slightly minus earnings per share, but I think that's nothing to be afraid of, and I think that's kind of par for the course when you're in a market that's this competitive. So finally, what will I be doing? What am I going to do with Square? Do I already own Square? In fact, I don't own Square, though it's been coming up enough as a meme stock that I've been like, man, maybe I should have gotten that. Maybe it's too late. What do I do? Maybe I'll just do an analysis, doing a video on it, and then learn what I'm actually talking about, rather than just seeing it on Reddit and buying it, you know. So I feel like Square is really, really interesting because more conservative investors are going to look at it and be like, oh, it's so small, they're still losing money, it's not that different from PayPal, whatever, it's not worth these crazy numbers. And actually a lot of analysts are kind of like, yeah, fair price of $50 or $80, you know, and right now it's like $130, which is kind of bonkers looking at those numbers. But keep in mind that they are kind of changing things up in a big way. If you're only going to look at the small retail, micro merchant stuff, I think you need to be a little bit careful. You also need to take into account the Square Cash and direct deposit and Bitcoin and all these other things. Granted, Square Cash doesn't make up a huge portion of their revenue at the moment. I think in the coming years, once they start to get this network effect going on, it could actually end up being a force to be reckoned with. And similar to companies like Tesla, I think the people who get it, and the people that don't are just going to be booing them until the cows come home. And if you got in on Square at 20, 30 bucks, you're probably pretty happy with yourself right now. I'm really, really interested to see what's going to happen in the coming months and years. It's probably safe to say that Square will be growing, you know, and if they keep up with the 30, 40% growth rate, I wouldn't be surprised if it is kind of like holding at 150 or 200 bucks in the coming years. So I think for you to decide what you're going to do with the stock, you really have to figure out your risk tolerance. If you're one of those people that just likes a really safe, secure company that's like, yeah, it's going to be fine, it's going to keep growing slowly, it'll be doing well, then this is probably not the company for you. I wouldn't be surprised if Square, you know, gets some bad press or the internet turns its back on them and the stock price plummets back down to 30 bucks again. One of the things I really love to do is to be dollar costing in and dollar costing out when I'm in a stock that I like. I might pick up a little bit of Square. I don't actually currently own any. I might start picking up a share here and there, you know, and keep an eye on it. And as it goes down, if it does, grab some more. And if it doesn't, then, you know, kind of keep averaging in over the coming months and years. With the really big vision of Jack Dorsey and kind of changing the whole future of banking and things like that, this legit could end up becoming like a 300 billion, 500 billion or greater size company in the coming years. Right now it's at 50 billion. It's overvalued, I think. So are you a risk taker? Are you not? How much money do you have on hand? I don't know. That all really depends on you. Personally, as somebody who's made a lot of money off of stocks like Tesla, I might dip my toes into Square, you know? That being said, I hope this was helpful for you. I hope you learned a lot from this video. I certainly learned a lot. Please let me know your thoughts, let me know your questions, or are you in Square? Are you looking to get into Square? Please leave your thoughts in the comment section below. If you enjoyed this video, please feel free to join us on our subreddit and let's be in touch. One of my goals with this channel is to be able to make a community where we can share our different ideas, look at different stocks together, share our analyses, and then also help each other to grow into financial independence and financial freedom. So if you're interested in that, please take a look at the links below. to join the community, and I'll see you on there. Thank you very much for your time, guys. Have a great one.